You ever wonder what happens when a regular guy stacks SCHD month after month and lets the dividends do their thing? Well, today I'm showing you exactly what's in my portfolio, how much SCHD I own, what it's paying me, and how it's actually performing. And I'm also going to show you my FXAIX position. That's right, we're talking dividends and index growth. But how did I even get here? About a year ago, I was scrolling through Reddit, as one does when they should be working, and I kept seeing SCHD pop up everywhere. At first, I thought it was some new crypto thing, and I was like, I'm not falling for that again. But curiosity got the better of me. Turns out, SCHD is actually an exchange traded fund that focuses on quality dividend paying US stocks. And let me tell you, as someone who once thought dividend was just a fancy word people used to sound smart at dinner parties, this was a game changer. What caught my attention was how people talked about SCHD like it was this perfect middle ground between growth and income. I had just turned 30, and the thought of actually having investments that paid me money while I slept sounded pretty amazing. So I did what any reasonable millennial would do. I spent about 48 hours in a deep research rabbit hole. YouTube videos, Investopedia articles, you name it. My girlfriend thought I'd joined a cult because all I could talk about was dividend yield and expense ratios. Here's what made SCHD stand out to me. First, the expense ratio is only 0.06%. For comparison, my coffee habit has an expense ratio of approximately 8% of my income. So already SCHD was winning. Second, it focuses on companies with a history of increasing their dividends. These aren't just any companies throwing cash around, they're solid businesses that have been growing their dividends for at least 10 years. We're talking companies like Coca-Cola and Home Depot, businesses that aren't going anywhere. Third, and this is key, SCHD doesn't just chase high yields, it looks for quality first. Some dividend ETFs go after the highest paying dividends, which can be a trap. High yield can sometimes mean a company is in trouble. SCHD's approach is more like slow and steady wins the race. I remember sitting in my apartment, calculator in hand, running numbers. If I invest $300 a month for the next 20 years with an average annual return of 8% plus dividend reinvestment, it was the first time I'd felt genuinely excited about my financial future. So I took the plunge, started with just $1,000. Not much, but it was a start. And I still remember the first dividend payment hitting my account. It was something like $9. I literally texted a screenshot to my parents. They were confused but supportive. What I love about SCHD is the psychological aspect. During market downturns, when everything seems to be going red, those dividend payments keep coming in. It's like the market is saying, hey, don't panic. Here's some cash to remind you that these companies are still making money. Over time, I've come to appreciate SCHD as the backbone of my portfolio. It's not the flashiest investment. It's not going to double overnight like some meme stock might, but it's reliable, consistent, and honestly, it helps me sleep better at night. The quarterly dividend payments have become like little financial holidays for me. Every 3 months, I get a notification that's basically like, hey, remember those companies you own a tiny piece of? They're sharing their profits with you today. And that never gets old. Now, do I think SCHD is perfect for everyone? Not necessarily. If you're 22 and have a high risk tolerance, maybe you want something more aggressive. If you're retiring next year, maybe you need something more conservative. But for me, in my 30s, looking to build wealth steadily while generating some passive income along the way, it's been a perfect fit. One thing I've learned is that investing isn't one size fits all. It's about finding what works for your goals, your risk tolerance, and even your personality. SCHD fits mine because I'm patient enough to let compounding work its magic, but impatient enough that I want to see some tangible results along the way. All right, let me pull up my portfolio and show you the real numbers. No fluff, no theory. This is my actual SCHD journey. Every dollar, every dividend, all in. Currently, I hold 300 shares of SCHD with an average cost basis of $27.55 per share. That puts my total investment at around $8,200. The current market value sits at around $7,700, giving me an unrealized loss of $547, or about negative 7%. But since I started investing in SCHD, I've received a total of around $100 in dividend payments. That's real money that I didn't have to work for. My money worked for me. I've set up automatic dividend reinvestment, so each payment automatically buys more shares, which then generate more dividends. That growth isn't just from adding more money. It's also because the companies in SCHD have been increasing their dividend payments. That's exactly what I was hoping for when I started this journey. While SCHD forms the dividend cornerstone of my portfolio, I've also got a significant position in FXAIX, the Fidelity 500 index fund. This is my growth engine that perfectly complements my dividend strategy. I currently hold 45 shares with an average cost basis of $206.62 per share. My total investment stands at around $9,333 with a current market value of around $8,800, giving me an unrealized loss of around $400 or minus 5%. The Fidelity 500 index fund tracks the S&P 500, so it gives me exposure to America's 500 largest companies. What I love about having both SCHD and FXAIX is the balance they provide. FXAIX gives me broad market exposure, including high-growth tech companies like Apple, Microsoft, and Amazon that don't necessarily pay high dividends but offer tremendous growth potential. Meanwhile, SCHD gives me that steady dividend income and exposure to more value-oriented sectors like consumer staples, healthcare, and industrials. Together, they form a pretty robust core portfolio. When tech is booming, FXAIX often outperforms. When the market gets rocky, SCHD's quality companies and dividend payments provide stability and income. I like to think of FXAIX as working for my future self, building wealth that I'll tap into decades from now. SCHD, on the other hand, is already working for my present self, generating income that increases year after year. Between these two investments, I've built a portfolio that gives me growth, income, and enough diversification to sleep well at night. It's not the most exciting investment story, no 10x crypto gains or meme stock madness, but it's a strategy I can stick with through market ups and downs. And that's really the key, isn't it? Finding an investment approach that matches your goals and personality so well that you'll actually stick with it long term. Because the best investment strategy in the world doesn't matter if you panic sell when the market drops or get bored and chase the next hot thing. So if you're wondering what my investing strategy is, it's this. Keep it simple, be consistent, focus on quality. Let time do the heavy lifting. SCHD gives me that reliable income stream. FXAIX gives me long-term growth. And together they keep me grounded while the rest of the market chases the next shiny object. This isn't about getting rich quick. It's about building something real, something that can pay my bills someday so I can retire early, travel more, or just sit on my porch and vibe with a cup of coffee. If you're just getting started, you don't need thousands of dollars. You can start small. I've seen people build portfolios starting with $5 a day. Just get in the game and stay in it. You'll be amazed what compound interest can do when you give it time. I want to hear from you. Are you riding with SCHD too? Or do you mix it up with other funds like VTI or maybe something wild like QYLD? Drop it in the comments. I love seeing how you all are building your portfolios.